Good evening, I'm Giuseppe Basile. I'm the analyst and mentor you can find at the website www.vipstalkertrading.com. I also post on Twitter using the @vipstalker nickname. Good evening. Today is Sunday, the 26th, July the 26th, 2015. It's 20 past 9 EST time in Toronto and New York. And in the next 10 to 12 minutes, I'm going to review for you the 14 markets I follow. I'll start from the euro dollar, which is what you see on the screen. This is the daily, and as we know, this market has actually pierced the weekly, has actually pierced the next measure move. So this market is lateral when it comes to the weekly, so it's not moving lower, it's moving laterally, and this could be lateral move are always either a continuation um, pattern or are an inversion pattern. If this is going to be an inversion, believe it or not, the market has the potential to trace back into 122, and that at that point would be a new short for this market. Looking at the daily, this market is clearly in, continuing on the weekly here, we can see that the lateral move conditions are satisfied here. The bulls are not capable of maintaining this price higher or above the 61.8% level, and the same happened to bears here. So this is lateral move. And let's go and look at what has been going on recently here. We had the bulls failing to support price, and then price went to the previous highs and then started moving lower. So at the moment there are two measured move in play here. The first one participated on the short side, 111.77, did not bring price into the first target, at least just yet. He went to test previous lows here, and on the daily we can see a level that was participated last Thursday, and if price gets into 110.12 and the sequence of measure move fails on the smaller time frame here, we could see a continued move lower into 107.90 and then potentially also lower into 107.10 here. Moving to the SP500, the SP500 is currently defending an all the way halfway back of the recent move higher here. The market moved higher very quickly, so initially it held also an extension, as you can see here. Market fund participation here eventually brought this level, so at the moment this market is actually testing, and actually this level has been challenged, but as you can see, the bulls are still maintaining the price here. Of course, there is going to be opposing measure move here, so the market could get into 2093, and then we could see a participation at that level. If that does not happen, we know that this market has a number of targets as we move higher, and you know very well that there is a target which is the second target of this extension long, which is the October call that actually reached the first target, but there is a second target above. So this market has many levels long that it would need to be removed before actually this market can start moving lower. So there is no risk in this market that I can see at the moment. Of course, anything can happen in the market, but until this area is holding, the next area is going to be there as well. And the next area, as we know, is the area that is already traded here as a 50% level. So if this market loses the 2069 here, there is again a potential to see this market for a second test of 2036. Dollar index, it has been strong in the last 4 weeks, but last week we saw the market actually retracting here, and those who follow me know that this market has already pierced although of a few pips here again. The all the way halfway back there opposite, so there is the potential for this market to still continue higher, and although there might be a correction here, there is the possibility for this market to continue higher. Now, if that's not the case, we need to see this 92.21 breached, and if the market goes back and tests again this 94, there are no indication that this level is not going to hold again this time. Gold, on the other hand, has been on a 5 days of down move here, 1, 2, 3, 4, 5 since Monday. So it's pushing back. It's pushing back into that area of potential support, and it's challenging now deeply that area, moving to new lows here since basically here 2009. So it is still in this area of potential support. If the market moves lower, there is no possibility for this market. And the moment, if we remove this larger measure move here, as you can see, the market hit the first target of this inner measure move short, and it's actually moving very aggressively towards the second target, which would be below that 1040. That would be below 1054. So that would actually mean trouble for this market, with a lot of gold producers actually either obliged to close business or sell futures here. So, and same situation for silver here. Silver is challenging previous lows. As we can see here, there is a measure move traced from 22 to recent lows at 1420 here, which is a first target around 1239. So we could see the market moving to that level. US dollar versus Japanese yen. This market has found support, as you know, it is all this 50% retrace here from the lows that we saw back in December 2015 to highs, and however, it has actually confirmed long apparently here, because what we saw is that the opposite measure moves has failed here. Now we need to see what was going to happen in this market. Notice also this large strong move higher, so there is definitely on the daily a level that is going to potentially support this price. And so if price during the week gets into 123 here level and the sequence of measure move fails, that could be an indication for a continuation higher according to this chart. Okay, and remember, we have support at 120.53 as well. Euro versus Japanese yen, we know that this market is actually correcting, and on a very large time frame here, on the weekly time frame, the indication that the market has offered in the past is that the weekly is off, it's neutral at the moment, and they're waiting at 122.11 to get involved. That would be a level of potential participation for this market. And as we noticed in the last few weeks here, there has been a participation on the downside that was identified by Algos and program trading, participating at this 137.20 here, and with a potential for a continuation lower into 131. Okay, the level that we mentioned before, it's well below, and it's the all the way halfway back from lows to highs here. Pound versus Japanese yen. It's a market also very strong. This market too has confirmed. It's actually very similar to what we're seeing in US versus Japanese yen here, and we have the same extension long from this high to high. So that could be 190.84 could be the level where this market could actually participate on the long side. So that's the level where you want to participate in this market for a continuation higher. Australian dollar, sorry, pound versus US dollar here. We have a market that is actually on the weekly time frame, as we know. If we go back to the weekly time frame, we know that this market has participated to 50% short. That's the short which is traced from the highs we saw in August 2015 here, July, mid of July 2014 to lows in April here, and as we can see, participation 1588 was neat, and this market has the potential to go and retest at least the old way halfway back 150 to 55, and so far the inner measured moves here are showing participation. In fact, we have this level that is being participated twice 2 weeks ago and last week as well. As you can see here, we had participation at this level. The high was 156.74. That level was never challenged, and this market offered multiple opportunities to enter short here, never challenged the high, and so this market has the potential now to push down into 152.44. That's a clear possibility here into that area of potential support. And the Australian dollar versus US dollar, this market has continued on the short side here, and as you can see, the recent extension found participation, as was mentioned a couple of weeks back. Congratulations to those who took the trade here, and this market keeps pushing lower. So let me move the scale here so I can actually show you where this market is pushing. Is pushing towards 72.30 here, and if that's the case, this market, if this week gets there, I mean, we're going to continue trading that market, tracing from a lows to lows here to capture the next area of potential participation short. So that's what we're going to see in this market. New Zealand dollar versus the US dollar here. This market is also in a correction lower here. We saw, when we go back to the weekly time frame here, we saw this price pushing deeply into this potential area of support here on the weekly, and on the daily there was a neat sequence of measured move until that measured move has failed, and this market came to trade a level, and that level was not possible to identify the level before the fact. As you can see here, it's not a traditional measured move here, as although price reacted at 66.38, but so only after the fact we are going to identify a level that could explain this reaction here, and that's a low to low. So there is a better level that explains this measured move here, and we're going to keep using this level to understand whether this market is going to reverse here, so above 67.34, this market could potentially start a reversal. If that's not the case, this market is going to continue lower using this jumping extension here, and the next level of target is going to be 64.08. US dollar versus Canadian dollar, very interesting market. The Canadian dollar has been very weak, of course, when compared to the US dollar, and the reason for that, of course, is the Central Bank of Canada cutting the interest rate here, which means that more money came out from from the Canadian dollar to get into currencies that at the moment actually can return have higher interest return here. So there is an extension along at 120.54, which could, and it's going to bring price into 132.17. There's no reason why we shouldn't see price getting there. And actually, this is an extension, so price can go as high as 138 here. So that's where price of this market is moving to. Euro versus Canadian dollar, we have, of course, a similar situation here with the euro reinforcing against the Canadian dollar. And as mentioned in the last few weeks, I mentioned that euro eventually would test that 143.05. Now, with the recent, there is a first target there, 144.28. With the recent weakness in the Canadian dollar and the euro stabilizing or at least moving laterally in a consolidation pattern, we could see this market also moving higher. Now, if we see profit taking that 44.28 here, what could happen is low to high here. That could be a next potential continuation area. Mind though that this is also a 50% chart, so if the sequence of measure move fails there, you have to take a short here with a potential into 139, but that 139 of course is not given that is going to work. So on the other hand, if this market just continues high, there's a second target here well above current levels, 148.61. That would be the scenario in case the euro reinforces again the US dollar as well. And last market here, this would be the US dollar versus Swiss franc. We saw the market breaking 2 weeks ago the old way halfway back here, and it's now approaching and trading the old way halfway back short here. So if this week we see a continuation lower here, there is the potential for this market to continue lower. Should this market move above 0.9726, we would have the condition for lateral market here, and as we know, consolidation market can resolve on the upside or on the downside as well. So this is all for this week. I hope you enjoyed this review. Just want to remind you that next week I'm going to actually launch the campaign for my FIB Stalker Method coaching program September session. The September session will be the last one in which I will do active review at least every 2 weeks, and then starting from next year there'll be a different arrangement. So if you want to get the most out of the program, this is the right time to sign up, and the starting date is going to be mid of September. So this is it for today. Thanks a lot. Enjoy your trading and non-trading week. Bye bye now.